All right, what's happening, guys? Welcome to another episode of Sensible Investing. It's been a long time since I've last posted, so look, guys, I am sorry for not putting up a video for, I believe it's at least a month now, and the reason being is because I've been really just going hard, grinding in terms of researching different stocks, opportunities. I've been opening positions, closing positions, rebalancing positions. It has been an absolutely nuts couple of months because of this whole sort of pandemic market crash. And now that things have calmed down a little bit more, I'm really looking forward to bringing you guys some more good content. And one of the ideas that I wanted to do, and I think this is going to be the focus that I'm going to be working on for the next at least a couple of years, is building a portfolio from $0, right? So from scratch to $150,000. And I'm going to be documenting my journey each and every step of the way. So when I make a trade or when I have a couple of stock ideas, do a quick update, right? And so that's what we're going to get to today. And the idea of this is to share my journey in terms of building it from nothing to 150K, share my mistakes, share the lessons that I've learned, right? Share the good times and share the bad times so that hopefully you guys can take anything valuable that you get out of this video series to improve your own returns. Right, guys, so the format of today's video and the subsequent videos for the 0 to 150K portfolio, stock portfolio, will really focus on a few key things, right? So the format that we're going to do is we're going to start off by reviewing the portfolio, and I'd imagine probably making a video maybe every 2-3 weeks, a month, just updating you on where things are at and what my position is, okay? So what we're going to do is we're going to start off by reviewing the portfolio, then we're going to talk about the stocks within the portfolio, my thesis and rationale for buying these stocks, and then when I'm looking to potentially exit them if I believe they've fully run up their value. So as you guys can see, now this is only a portion of my portfolio because at the moment I'm using 3 brokers. Look, long story, right? It's just a pain in the ass transferring stuff from one to the other, and then some of my brokers can't do this order and then can't do that option, and so that's why I have 3 brokers. Anyways, all right, guys. So as you guys can see, year to date, my first portfolio is up 25.5%, and I am 33% cash. Okay, and if you guys have been following my previous videos, you'll know that I've done a deep dive on pretty much all of the stocks that you're seeing over here. And so these gains aren't inclusive of some of the gains that I've already taken off the table, and we're going to be talking through that a little bit later on as well, okay? And this is my next portfolio, which is my Australian portfolio, and you guys will notice, oh, hang on, Afterpay's not in here, okay? And the reason being is because I did take profits on Afterpay because I felt that it had run up enough, okay? So we'll talk about Afterpay a little bit later on in the video. And then finally, as you guys can see, this is my next portfolio, and it's so weird because this broker can't actually show me my year-to-date gains or losses. So basically, I've just taken a screenshot of all my purchases that I've made this year and sales in this portfolio, just so you guys can see over here the sort of average price, what I bought it at, and whether I want to keep adding. Okay, guys? So, look, I just wanted to start off by quickly talking about Alta, because I'm still very bullish on Alta, and I think that this is maybe a $340, $350 stock. So I've just added to it, and my position is fully built, so I'm quite happy with that. I've bought back into Canada Goose, and the reason being is because I had a look at their most recent earnings report, and it looks like their hardest hit quarter will only be probably about $10 million worth of damage because of the coronavirus. Okay, guys? So I think that this could be a good point to get back into Canada Goose. Not too big, just a little position. And then I've opened a new position called Citi Trends. Okay, guys? So we're going to talk about that a little bit later on in the video. All right. So, guys, I wanted to first of all just start off this video for you with the lessons that I have learned from this crash, this investing. And, there's been some good times, but there's also been a lot of pain in terms of, I could have made way more, but then I got out too early, okay, guys? So the biggest lesson that I've learned from this stock market crash is, number one, never ever listen to the financial press, okay, guys? Because if you remember when things were getting crazy back in late March, they were like, reinfection, worse than the Great Depression, okay, guys? Load of shit. Look at where the market is today, right? So always trust your own research. always trust the facts, never listen to the noise, and never focus on anecdotes or opinions, because they are just that, okay? They say hindsight is 20/20, but nobody ever looks back. And you guys think about the amount of shit that the financial press writes about this, imploding, right? And none of that happened. We had a V-shaped recovery, right? So missed out on some gains. So I just wanted to take you through some of the pain that I've had, and that's why I've brought these lessons to you, okay? So Lululemon, you guys saw the video I made on Lulu. I was really, really bullish, okay? But round about April, I really let the noise get into my head, and I got out of the stock, and as you can see, it kept on running, and now it's at all-time highs. And the reason being is because it's a fantastic business, the sentiment is good, and their customer base is loyal. They have a really good niche. Why would the stock not be stronger than what it was before the pandemic? Yeah, we had a shutdown, but we had the stimulus, and everybody's getting back to normal, right? And then this sort of 4 or 5 months will just be a blip in terms of the next 10 years, okay, guys? So mistake number 1, Lululemon could have made a lot more, didn't, all right? Mistake number 2, again, guys, you knew how bullish I was on Auckland Airport, but I got out of it because I thought it'll take far, far too long for travel to get back to normal. And also, I let the fact that because Warren Buffett had sold out of his airlines, I let that get to me, okay, guys? And as you can see, it ran up from when I sold it, all right, guys? So again, just trust your research. Don't listen to the noise, okay? Now, I wanted to talk to you guys about Afterpay because this was a big win, and I did trust my research, okay, guys? So as you guys can see, this is my biggest win, right? I ended up getting out of Afterpay, sort of with about 180% gain, and it effectively took my Australian stock portfolio to about plus 90%, okay? So, this year to date, the market's down like 3%, and I was up 90%. So, look, really good performance on Afterpay. I could have probably taken a little bit more money off the table by holding. So, one of the lessons here is I was probably a little bit impatient because over here I thought that it had fully priced everything in, but obviously not. But like they say, right, you can't go broke by taking a profit, and you can't really time the very bottom and the very top. But all in all, good win in Afterpay, right? So this was a good example of me trusting my research, not listening to the noise, and as you can see there, the fruits of my labor can be seen over here as the result. All right, guys, so that is the lessons learned from this sort of pandemic crash, okay? So now I wanted to take you guys through a couple of positions that I recently opened, and my investment and long thesis for these positions is it's probably going to be a next 1 to 3 earnings call play, whereby I don't believe the market has fully appreciated the tailwinds in their favor. Therefore, there should be a rally of, X many percent. I'm not too sure how much, but probably within the vicinity of 30 to 50. That's my assumptions, okay, guys? So the first one is CalAvo, short for California Avocados. And the reason why I'm bullish on these guys, okay? So first of all, as you guys can see, they haven't rallied as hard as a lot of the other stocks in the market, and I believe that the reason being is because people have misunderstood their business model, right? This is not a food service driven avocado supplier. This is a heavily retail driven avocado supplier that supplies, to the likes of Kroger, who's 28% of their revenues, okay, guys? And based on my research, what I can see is that the avocado sales, both in terms of volume and pricing, is significantly higher this year than what it was last year, especially in the first half of the year, compounded by the lockdowns and stay-at-home eating, okay? So as you guys can see, here are the numbers, right? And it's doing well compared to other fruit and other fresh produce, right? So fresh produce, fresh fruit, lots of tailwinds, people have been eating at home, okay? Now, the other thing is, you guys might say, well, what's the risk to this company for food service? And like I said, now the company doesn't specifically disclose how much they serve to food service versus retail, but based on my research into other models, you can actually see that circled in the red, especially fresh fruit and a very specific fruit of avocados, it's not very food service heavy unless you're talking sort of your Mexican restaurants, and then they typically use sort of reconstituted powdered avocado crap, okay? And furthermore, after contacting the company and doing research on their customers, I'm pretty confident that about 85% to 90% of their revenues will be to retail, okay? And that's why I've opened the position. Furthermore, if you look at the other tailwinds, now you'll notice that the Mexican recipe trend on Google Trends for the last 5 years has been steady, and it has never gone up. It has effectively doubled, maybe 250% increased, as you can see, because of the whole COVID. And the reason being is because that date actually coincides with Cinco de Mayo in USA. And as you can see, because people could not go out and eat in the Mexican restaurants, they've had to now do their own Mexican recipes, right? And as you guys know, Mexican food is very, very popular in the United States. So you put that together and see how much, you know, it relies on avocados in Mexican recipes. I just think that there's going to be some massive, massive tailwinds that the market hasn't really appreciated for Calavo. And that's why I've opened a position in this company. All right, guys, moving on. The next company that I wanted to talk to you guys about is a company called Citi Trends, okay? And this is a very, very interesting business with a very interesting demographic. They don't do any e-commerce. And you guys might be thinking, Jesse, you're absolutely suicidal. Why would you buy a brick and mortar retailer? And that is because they have a very, very loyal niche customer base, okay? They specifically serve the low-income black community, and these guys are loyal, okay? So you guys can say, okay, well, the shutdowns means nobody has been able to get in store to buy anything because they don't do e-commerce. You're absolutely right. But now that the stores have opened up, my bullish thesis is that the pent-up demand is going to be much higher than those who have had e-commerce because they have been away so long, they just need to get their itch scratched, okay? Furthermore, if you have a look at what happened to their business during the GFC compared to the likes of Macy's, Kohl's, your JCPenney, which is now bankrupt, you can see that they actually experienced huge growth, okay, versus that. And that is because, like I said, right, people have less money, they want to spend less, they want to get value. It's really, really going to be a good tailwind for bargain retailers, okay? In addition to that, if you actually have a look at how much the stock rallied from their lows to here, and then compare that, right? So during the Corona crash lows, they made about sort of $8 lows, much like what happened over here, and that rallied all the way up, you know, we're talking sort of $30. Now, will it get to 30-something dollars? Maybe, maybe not. I think sort of maybe 25 is a good probability, so it's still good value at these prices. And also, if you have a look back to their very, very old, because I've dug back to all their financials all the way back to sort of pre-2007 GFC, okay? Now, they cited strong tailwinds because of stimulus checks, okay, guys? So keep that in mind. And this was, you know, 10, 12 years ago. Again, nobody looks back, right? They just buy stocks. I look back, and I've got good reason to believe that this will be a tailwind for them. Furthermore, if you guys have a look at one of their peers, Ollie's Bargain Bin, okay? They have just made well, not all time, but I think it's all time. Anyways, they have made highs. They've pretty much doubled or tripled their stock price from the lows of the Corona crash. And again, they have cited strong demand because of the stimulus, okay? And just have a look at Ollie's share price. Okay, so it's not quite all-time highs. It's one-year highs. But as you can see, up 180% from the lows, okay? And they cited, as you can see highlighted here, strong demand because of the stimulus. Now, let's actually have a compare of the Citi Trend stores to the graph on the right-hand corner. Okay, guys? Have a look at the geography. The stimulus is so potent this time that we are talking at least 70% of the map is getting either as much of what they're making before or up to 130% of their income. Okay, so they got paid more to just sit at home and do nothing and just take the stimulus. Okay, and now compare how the geographies coincide with where Citi Trends stores are, and you guys will see why I'm so bullish, right? So we have unprecedented stimulus, people who haven't been to their favorite store of a specific customer demographic and niche for many, many months, right? They're just chomping at the bits to go out and buy something, all right, guys? And my research tells me that this community of people of this income demographic, they don't travel much. So that's even more money that they're going to want to spend on something discretionary. And so again, that's why, guys, I think that Citi Trends should theoretically experience something similar to what Ollie's Bargain Bin has. All right, guys, that is the end of the video. Look, again, been a while. Appreciate you guys watching my videos, and I'll try to post a bit more often. But as you guys can see, I'm just in the matrix doing research every single day. Okay, guys. But hope you enjoyed the video. Look, happy to answer any questions. Leave a comment. Let me know what you think. And until next time, happy investing. I'll catch you in the next video.